If the PC is dead, then why is Hewlett-Packard having such a great year? Investor Beat starts now. Thanks for watching. I'm Chris Hill. More red on Wall Street today, and once again, financials were at the center of it. American Express, one of the big stocks that was keeping the Dow Index down. Joining me in studio today, Jeff Fischer and Bryan Hinmon. Guys, our top story today, the number one performing stock in the Dow Index this year is Hewlett-Packard. In an interview with CNBC, CEO Meg Whitman said she's happy with the progress the company has made so far, but there's a lot of heavy lifting ahead. Are you surprised? First and foremost, are you surprised at the performance of this stock?
Well, Chris, I've been following Hewlett-Packard the last couple of quarters because Meg Whitman is about 2 years into her turnaround, and a lot of things have been going right there. Their operating cash flow is up 44% year over year. Free cash flow is up 90% year over year. How is that happening? Well, they still have about $115 billion in annual revenue. It's still a giant company, and they're cutting costs like crazy. So they're taking out all the extra costs that they have, and that's really falling through to the bottom line. So the shares were very inexpensive as the year started, and they're still inexpensive at 6-7 times expected earnings and free cash flow. So I'm not that surprised that they've bounced quite a bit.
Over the next 5 years, Whitman says the number one focus is going to be revenue growth. How do they get that done?
Well, it's going to be hard, Chris. Jeff said that they have $100 billion in revenue, so that is a big locomotive to get lurching forward. But one of the things that I think Meg Whitman has done really well that's gone a little underreported is she has continued, although they're cutting expenses, she has continued to boost R&D spending, while at the same time focusing what that R&D spending is actually on. So you're getting the dual bang for your buck there of more R&D, but on fewer projects. And so that could portend better sales down the road.
What do you think of the stock? I mean, it's had an amazing run so far in 2013, up around 70% year to date. You like it?
I still do think it's very interesting at this price. And the thing to remember, PCs, although the PC industry as a whole is performing poorly, it's a relatively small part of their profits. The enterprise and printers and enterprise services is a much bigger part. And as Bryan said, that's where they're focusing a lot more energy and R&D. So.
All right, let's get to some of the day's movers and shakers. Lululemon Athletica down again today as the fallout continues from Christine Day's decision to resign as CEO. CEO transitions, they're tough under good circumstances. These are decidedly not good circumstances.
Yeah, decidedly not good. And I think the underpinning here is normally I don't mind CEO transitions if there are structural advantages in the business. The bottom line, though, is this is retail. There are no structural advantages. What matters in retail is brand, and the leader of your brand building is now gone. So there's a lot riding on this new CEO selection. I say beware.
Boston Beer getting an upgrade from Goldman Sachs after the firm said it underestimated the success of the brewer's hard cider brand with the fabulous name Angry Orchard. You look at this stock, it's just been a long-term winner for years now.
Has been a great performer. It started as one of the smallest microcaps in the country, microbreweries in the country. Now it's the largest craft brewer in the country. And the funny thing is, it was Goldman Sachs that upgraded today from a sell to a neutral.
Yes, damning with faint praise.
And that was enough to send the stock soaring above their target price. So I think that encapsulates what investors are struggling with here. You have a great growth story growing 20% plus a year right now, but trading at a premium price of 38 times earnings. So it's a richly valued stock, but I wouldn't bet against it the next 3, 5, 10 years. I mean, it's beer, and they're doing it very well.
It's beer, and this is America.
That's true, too.
Ulta Salon's first quarter profits rose 20% and same-store sales improved as well. A good day for the stock. Last year or so, not so good.
Yeah, they took down estimates not too long ago, and so keep that in mind with these, this revenue and earnings beat. They're beating expectations that they themselves set lower. So this is a nice little game that they're playing here, but this was a pretty good quarter on the cuff of it. They reiterated their growth plans. They have about 575 stores now. They're set to open about 125 this year. So this is a big growth story here. But again, I'm going to throw out there a little bit of caution. There are a couple things that are probably being swept under the rug a little bit in this earnings release. Gross margins were down, which is not necessarily a good thing when you're seeing all this growth. This business is not Amazon-proof. and they still don't have a CEO, a full-time CEO in place here. So the business might still be growing, but it is growing without a captain at the helm.
And finally, shares of Herbalife up. The nutrition company said it has almost 8 million customers in the U.S. This is based on results of an online survey, and yet shares up around 40% year to date. Are you interested in Herbalife?
I am not interested in the stock. Okay, the company had to do a survey to try to convince investors that they have customers because, of course, Bill Ackman is a big short seller. He's short $1 billion worth of the stock, saying it's a pyramid scheme.
He's having a rough day.
It's a pretty critical slam of a company pyramid scheme. So that now Herbalife is saying that 3.3% of the population has bought one of their products in the last 3 months. That, to me, sounds quite impressive if it is true. But that you have to have a survey to say, hey, look, we have customers is questionable, and that they're spending so much time focused on short sellers and the share price instead of the business makes me want to stay away from it.
All right, that's going to do it for Wednesday. Let's look ahead to the rest of the week. Bryan, what's the stock you've got on your radar?
Sure. BP put out a study recently that basically highlighted the importance of emerging markets in their role for the growth in energy consumption. One company in the space that I really like, well positioned there, is Halliburton. So I'm looking forward to how investors are going to interpret Halliburton's new international strength with regards to this report.
All right, Jeff, what about you?
This is a long-term thought, a stock to watch. Walgreens, an American stalwart, more than 8,000 locations around the country. Everyone knows it. But they're under attack from the likes of Wegmans and Walmart and Target, who are now selling prescription drugs as well, which is the bulk of Walgreens' profit. So it's much more convenient if you're in one of these mega box stores to get everything taken care of there at once, instead of stopping separately at the drugstore. So that's why in the long term, Walgreens is fighting to maintain its competitive edge. So it's one to keep an eye on.
All right. For Jeff Fischer and Bryan Hinmon, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.
As always, people on the show may have interests in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear.